Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be taking a look at, if you couldn't tell, candle by candle analysis, looking at the psychology behind the candles and what's going on, in really kind of dissecting the market as though we were kind of analyzing it through a therapist's eyes, and looking at the people behind the candles and what they may be thinking at any given moment. So looking at the S&P here, starting off, we have a very small gap to the upside, and right out of the gates, we can see that yesterday really had some, geez, oh Pete's, they had a really, really huge move. From the top all the way down to the bottom was the first two candles. So the first 10 minutes, they had the entire day's range, and the market didn't ever break outside of that. So that is going to be a major zone of interest that I want to keep my eyes on when we start getting back up to those highs and back down to the lows. It's going to be a huge spot of interest. Along with that, we have our settlement price, which is just kind of hovering here at 27.50 that the market's already pulled back to and filled in. So they're really, even though there wasn't a whole lot of a gap to begin with, they've already kind of filled all of the objectives they may have had. Noticing what has been going on with this giant move to the downside from the day before, if we go back and we look what has kind of happened, the day before that we had a really, really sideways range-bound day, and then we had a big dive down, more continuation to the upside. If we go back, what might they have been looking for? Notice settlement price on the day prior was over here. The market was only able to make it to over here. Now, when they finally were able to dive down, regardless of the reason, that's where they found the higher lows and rotated the market back up. So I do have a little bit of a bullish intention on this going into and out of the gates here. We're continuing higher lows, higher highs. The market has broken now with this open above a previous swing high. They did challenge a very disgusting spot. The top of this bear bar is a really nasty area to open up on, and they rejected accordingly. So noting that they did reject accordingly and the market's kind of sliding back to the downside again, they filled in all of the objectives. Maybe we have another giant bear bar, two bear bars again like they had the day previous, but this seems like all objectives are kind of done. Now, from a 5-minute perspective in terms of the volume, let's go from the first 5 volume, and the POC is actually right on top of settlement at 27.50. That further exemplifies what we're talking about there. We get a bullish response. It's an inside bull bar. Now, the inside bull bar here, given the location, the fact that we closed underneath and then we're now closing back above, and the context that we were talking about with this kind of bullish intent. We've cycled off of the previous lows. We filled the gap, and the market's now responding with a small bullish inside candle. It's not the best looking bull bar in the world, but buyers, given the context, will look at this as a reason for potential longs. Realistically, I don't think they can be anything other than scalpers because they're going to have to risk a decent amount to actually get that to work out. Now, as far as the upside really goes, I mean, it just fits. It just fits inside the previous swing high. What might be even more beneficial is letting the bulls trigger and then, getting a slightly better entry. But either way, the buyers will be looking for a continuation up for a little bit more. And I think to play it safe, 31.25 makes more sense. Okay, big strong bull bar to the upside. This may, depending on how the next candle forms, create some bullish candle gapping. We don't have any yet. And they are also breaking out of that first 5-minute bar. Now remember, we've been inside the first 5-minute bar this entire time. And if we go to the first 15-minute volume and we look at what's going on, the POC is actually down at the bottom. Very, very bullish in terms of the likelihood of what's going to happen here. From that perspective, even though I wasn't necessarily looking for a long down there, I still have to assume that there are traders who are long from there, and their 2-to-1 objectives are above the highs at 31.75. So I know that the scalper's objective, it's still got room. We're still okay. And there it finishes it off. We've got a continuation up. They hit the objective. They pull all the way back down to break even. Now notice they did close above this break even point. So the fact that they were able to close above that break-even point may suggest that buyers are still coming in. There isn't any candle gapping, but then again, there isn't any anti-gapping either. Like it didn't overlap either. They just kind of double-topped on one another or kind of butted against one another. So that's still kind of suggesting that the bulls may have some strength here. We just don't necessarily have proof outside of what's going on now. The scalpers have had their objectives taken off. We know that those were hit. Great. That's awesome. Now we've got to wait to see what the follow through is for a bit more continuation. From the bulls perspective, it still looks like the bulls are long. The POC is still down here at 27.75 and hasn't changed. Inside bull bar with another continuation to the upside. Inside bull bar makes me nervous. Did they shift the POC? Okay, they did shift it, but the market closed above it. That's a good sign. The bulls are still trying to cling on to their last grasp. They're holding on to it. They shifted the POC up. That does suggest that buyers have taken some profit, potentially upwards of 80% of their positions, if not more. But they're still closing above. Very, very important aspect when we're talking about this. Still looking for more continuation up. And we know that that larger resistance zone, the magnet or whatever, is up there at 32. We'll see if maybe they want to reach out a little bit further. A little further. We got a very strong break above that area. And now this is also, remember, from the scalpers who were getting in earlier, their objectives to the upside were taken out. We did have a double failure to break above, but now we've closed above it. A lot of times when we re-up that sentiment, traders will try to come in on that next pullback. Now, we do know that there is support resistance at 44.32. That would be the previous high of day, but we've broken just above that, and the buyers are going to be looking for a little bit of a dip to pick up if they're able to. We get more continuation to the upside. Let's keep track of volume here. The POC is still hovering back, but we're getting a lot of volume starting to creep in at these 33.75s. This may be a short-term profit-taking area. We haven't had the dip for buyers to try to reach back in the 31 quarters, 32s, anywhere down here for them to re-up. So realistically, I mean, we're still kind of dealing with the traders who have their, the POC from up here now. And we're breaking above, sure, but that's about it. The only other consideration that we still have going on is more recently, actually just on this most recent candle, created some candle gapping to the upside. And that candle gapping does suggest that the bulls have a bit more potential to the upside, with upside objectives reaching out to 35 quarter, assuming that gap stays open. Okay, the gap barely stayed open. It just nicked it and bounced right back up. It did stay open though. The buyers did buy underneath that previous candle, huh? We got that job done. The POC does shift. The market is still closing above the POC. It still seems like we've got a lot of bullish intent, and the dip is very small. Bulls are looking for a continuation higher. The market's still rallying to the upside. The candle gap is open, but it did narrow up a little bit. Let's make sure that the candle gap is measured properly, and that actually found its completion right at the top at 34.75 because of that little backfill. So with that backfill, we are now completing our candle gap objective to the upside, but we're still closing above the POCs. This is another bull engulfing candle that formed, and we're demonstrating a huge amount of bullishness right now. So looking at the overall movement that's going on, realistically, it makes a lot of sense that we continue back up. We keep going. More momentum breaking further out. No candle gapping because of all of these wicks inside of here, but the candle gap objective is done. We're breaking above. We've got some major rallying going on. Let's see what's going on up at the top. The POC was left behind at 33.75 with a big breakout above the highs. Now, bulls who have been long, we've already got the breakout, the pullback, although it was very small, and the continuation back to the upside. The market is still maintaining its structure above the POC. We have every reason to believe that the bulls still have their hold on this. We get a little bit of a pullback, big bear bar, in fact, starting to take back a good chunk of that last candle. No POC shift, but we are starting to see volume creep up in the 36.50s. If we see the POC shift up and the market is staying underneath it, we then have a different context that has not been happening yet. That would suggest that the buyers are finally exiting everything. We don't have that yet. So it's still likely that we get a bullish response, and this is nothing more than a pullback in an overall trend. The bulls continue back up as expected. It's an inside bull bar. Let's look at what's going on. Oh, okay. So we've got the POC shifting back up, and the bulls are still closing above it. Hot diggity. So we may have a chance to follow through with a little bit more, too many M's in there, a little bit more momentum to the upside to keep this thing going. Oh, well, never mind. That changes things. We're going into 1035, but now we're doing something that the market has not done. We're closing underneath the previous POCs. All of the other times the market has been closing above, continuing, closing above, continuing, closing above, continuing. This time we're closing below. That's the first time that that's happened for a while. Now, again, that from a trend perspective, that doesn't mean that the trend is totally over. But that does change things. If longs were long, we see the POC shifting up and the market is now closing underneath it. That suggests that the longs who were long out of the gates are out completely. There's nothing holding that up anymore, which would mean that if the market does return to this area, shorts may even operate with a mentality that they're able to short around this 36.50 with a small stop and a very large reward back down to around the 32s, and it fits. So this is starting to shift things a little bit in the short term. This is more likely just a pullback before a continuation back to the upside, but this is beginning to break down away from what it has not been doing before. Okay, so wow, a huge jumbotron of a bear bar to the downside. Holy crap. Well, this will happen from time to time. This is the S&P too, keep in mind. This isn't like the NASDAQ or anything. I mean, obviously, the big clue is when we started closing underneath the POC. Would I expect this to happen every single time? Absolutely not. This is very likely a surprise move that took a lot of traders by surprise, which means that we're probably going to get what? When we have a surprise leg, it depends on the response. If they just V-bottom and go straight back up, because there is some gapping that might magnetize the market back, then we'll have a V-bottom and a continuation back up, at least back up to 36.50 that they left behind. But if we stall and we don't show a whole lot, then we're probably going to have a continuation down. We already know that a lot of the bulls have potentially gotten out, and with this, I think it's fairly obvious. We have a shallow little bounce. Inside bull bar, it's fairly easy to be inside that jumbotron bear bar, but we've got a POC that is attempting to get a little bit of a bounce. Now, from the context of what's going on here, right, we have the POC that is shifting back down. That's where the POC was earlier, remember, and where all of the traders have just gotten out of their 2-to-1s. Now, let's think for a second. The POC just shifted back to the upside, and the volume before this really wasn't that high, right? Look at the volume differences. So if we put a vertical line in where the volumes are, those are the differences. Like this little distance right here, that's the distance between those two volumes. So the fact that the POC shifted back down again doesn't necessarily suggest anything. The way that it shifted down tells us everything, because this volume now dominates the previous structure. Before, it looked kind of like porcupine-y. There were little jerks and all over the place. But this is a very standout bull bar that just stopped dead in its tracks. We did close back above the POC, but remember, this is where the bulls took off in the first place, and those bulls never had a chance to reload. This is either the V-bottom that the bulls are looking for before a massive rally to the upside. And if that's going to happen, they should be able to trigger above the bull bar, and hopefully that would allow a 2-to-1 back to the upside. Let's see if it fits. That doesn't quite fit. So what might be necessary for the bulls' perspective then, because it doesn't fit, is to see it trigger up and then pull back. It's going to have to pull back to... I would prefer 31, because that gets the 2-to-1 inside the high closes, high opens, etc. So there are a few caveats for the bulls. They need to trigger above the bull bar and then pull back, and they're going to have to pull back to 31 because that's the only way that the math fits. That's not good, because that means that the bears have a little bit of emphasis here. This big volume bump may be nothing more than the longs who were buying in, taking profit because we saw the POC shifting, taking profit, now closing under. Dump everything? Maybe not everything. Remember, we're talking possibly hundreds, if not maybe even, multiple hundreds of contracts. They don't necessarily have to exit everything, but where's their stop going to be? Their stop's going to be right back around break even. They're not giving the trade back. It's already gone 2-to-1, 3-to-1, depending on where they got in from. So it makes a lot more sense seeing this volume here where if the bulls don't trigger, it's a huge problem for the bulls, and the bears could be looking for that second leg down. If we look at it from an impulse perspective, they're likely going to impulse leg measurement from about this distance. Okay, we have another bear bar to the downside. So as far as the bears are concerned, we're looking for downside continuation, potentially down to the 1950s. That doesn't necessarily mean that's where it has to go, but that's where the last dive to the downside went, and we have a small little pause, and that's the next objective. The other consideration would be looking at it from a volume breakdown. We have the middle POC volume right there. That would give us a shorter term objective, a little bit higher at around 2175. Either way, this gives us the objective zone for sellers, and that objective zone is still underneath us, which means that sellers still have every reason on the planet to be looking for shorts. The problem is selling way down here is really difficult because where are we? We're right back down to the previous range lows. Talk about a tough spot to want to sell into. Now, if we look at it from a volume perspective, they've obviously closed underneath that volume, but if we look at where we are now, we've sort of left that behind. That 44.30 area is going to become interesting, and we're going into 10.45 with a big bear bar down. Sellers may not necessarily want to sell all the way down at the bottom, but if they get an entry, let's say with a stop above that bull bar, and a target down towards those low closes, they would want an entry back at around 27.25 at the least, if not better. And settlement is right there, waiting as an extra level of resistance. Now again, the only reason I say there is because that's where the half to one scalper's objective fits inside the lows if it were to pull back. And if it doesn't pull back, we already know we've got the downside objective just a little bit further. Okay, nice little inside bull bar, very strong looking inside bull bar, and we pulled back to that zone of interest. Let's for a second just assume that the close of this bull bar is where all of the sellers come in. Maybe they're a little bit less aggressive than myself and they're looking at it from this angle. It still fits with targets to the downside. So that's fine, right? There are no changes. The anticipation here is that the sellers continue to the downside. It's just that the leg may have to adjust a little bit. It's no longer all the way straight down from a measured move. The closest they have would be right about there now. So it's narrowed in the objective a little bit. Oof. Jeez, oh Pete's gigantic continuation to the downside. Now, obviously the scalpers were correct, but it did go way, way down, all the way down, very close to the target objective and put in a huge wick. Now, put yourself in the shoes of the short who sold somewhere inside here. It doesn't have to be perfect. And you see this move down and you know that the longer term seller's objective is down here and they missed. Now, with this big wick down, they're closing underneath the scalper's objectives. My anticipation would be that the sellers are going to keep looking for more downward movement as we go into the lunchtime session going into 11 o'clock. And that assumption would usually look for some type of, inside bear bars, some dojis, just kind of grind its way down to finish off the objective and get it done down here. Okay, that's one way to do it. That's not what I would have wanted to have seen, though. Really nasty bull bar in the sense of shorts. If I were short and I see this bull bar, I'm thinking, well, wait a minute. Why is that so bullish? We just got down to those objectives. They missed it by 2 ticks. And now we're seeing an incredibly strong bull bar closing back above the target area. This may not be the perfect spot for a long, and in fact, it's incredibly early. If a long is going to be going long here, their stop's going to have to either be down here and accept the fact that the probability sucks and hope that the 2-to-1 is inside the high, which it is, so it does fit. If longs were going to buy here for a 2-to-1, it fits. We know that, okay? Now, that said, that tells us that it's low probability still. We don't have a reason to believe the bulls are taking over at this juncture. It's just low probability swing traders, which means that the sellers still have a reason to try to go down, but this is massively disappointing. The sellers did not want to see that bull bar back up, and at this time, it's 11. Like, what terrible timing. Another bear bar back to the downside, I guess if you can call it that, ricocheted off of the break-even point, went all the way back down to the lows and closed back above. Now put this in the context that we were just talking about. What does this seem like? Like, oh man, look at this bull bar. You're short, right? Goes all the way down, misses the downside objective. You've got your scalp target off. You're waiting for a little bit more to finish off that final run, and you see this strong inside bull bar. Like, oh man, like really? Oh, okay, great. Well, they haven't closed back above the break-even point, so I don't have a reason to disprove them yet, but if they slide back down, I'm just going to take profit a little bit early. You can almost feel them saying that. It dips underneath that strong bull bar. Oh, perfect, take profit, take profit, take profit, take profit. They did it so hard that it closed way up here. So there's obviously a lot of shorts that got nervous and they jumped ship. That doesn't mean that the downside move can't continue because we still have open objectives here, but we're seeing some problems. They're telling us that there are some issues with this move going on to the downside. Very nice bear bar, micro double top off of the entry point with a continuation lower. It makes a lot of sense that sellers are going to try to get a little bit more movement to the downside to try to keep this thing going. But as it stands, like we've been talking about, there are some definitive problems with how this is moving. So if the bears don't show up to the party, it's going to be game over. Downside objective still 2175 and running out of time, so we'll just kind of play by play the last bit here. Little more down, continuing, looking okay. Bears are separating away. We're away from the break-even point. Scalpers won't let it come back again, and the downside objective is still open. Bull bar back up, a little bit troublesome here because the sellers know that we've got some problems. And now that, look at all this chop and slop. It's a mess. I doubt many scalpers are going to hang out in this. And this increases the probability that the longs who were talking about earlier may be jumping in here, possibly even for a 3-to-1 if that fits. Does that fit down here? Oh, almost. It almost fits a 3-to-1. Oh, it does fit a 3-to-1. I had my drawing wrong. So this fits a 3-to-1 to the upside. You only have to be right 27% of the time for that to work out in terms of traders math. Well, 27% of the time with a higher low after missing an objective with a longer term trend being up and everything going on right now, well, realistically, there's some definitive things that are telling us we might want to pay attention. And if we look at the POC, we're closing on top of it. So a trigger above this bull bar is also above the POC. It's everything. And we get the follow through to the upside. Bulls did not hesitate. More continuation back up. There they go all the way up. They missed that 3-to-1 objective for the bulls. And then they just went sideways for the rest of the day. So in terms of the overall movement that we have here, this is still very obviously a sideways range and consolidation and corrective phase. And the bulls are still likely in, looking for a continuation back up. Maybe they gap into the next day, who knows. But realistically, very, very interesting play-by-play going on here in a range day where it's just the buyers and the sellers fist fighting one another for position. And when you get stuck in the middle of that, that's where all the trouble comes in. And notice, all of the interest happened at the extremes. Very important. Now, the most interesting setups happen when we are going with the direction of the overall preceding trend, another important aspect. Either way, if you have any questions, as per the usual, drop those in the comments below. I hope you found the video useful, and as usual, I hope you had a fantastic day of trading, and we'll talk to you in the next one, all right? Have a good one. We'll talk to you all then. Thanks.